Economic uncertainty is at an all-time high. It's higher today than during the pandemic in 2020, and several times higher than the Great Recession in 2008. In other words, nobody knows what economic turns are coming next from the White House. And that's mostly because of the massive tariffs that Trump has slapped on nearly all American trading partners. The scale of these tariffs took nearly everybody by surprise, and the rollout has been unpredictable to say the least. And that kind of uncertainty has put the Federal Reserve under mounting pressure to lower rates to support the market. A lot of that pressure has come from President Trump himself. He has personally criticized Fed Chair Jerome Powell on Truth Social. In a post on April 21st, Trump called Powell Mr. Too Late, urging him to lower rates now to avoid a slowdown. But Jerome Powell isn't taking that advice, at least not yet. The Fed was cutting rates in mid-2024 as inflation was coming down, but they stopped cutting late last year, and the Fed funds rate has remained flat since January 2025. In December, they reduced the number of anticipated rate cuts in 2025 from 4 down to 2, and the Fed is widely expected to keep rates flat until September. Powell has explained this cautious approach by pointing to uncertainty surrounding Trump's tariffs and how they'll affect prices, calling it a wait-and-see approach until the impact of tariffs is clearer. But why won't the Fed just lower interest rates to support the market? Well, the Fed follows a dual mandate of stable prices and maximum employment to maintain steady economic growth that's not too fast or too slow. Economic expansion naturally ebbs and flows in a process known as the business cycle. It looks like this. During these steeper expansions, the economy is growing, has low unemployment, and usually rising inflation. To keep the economy from overheating, the Fed usually raises rates here. That slows the economy down a bit, inflation cools down, and unemployment might go up. Then during contractions, the economy generally has higher unemployment and low inflation. This is when we can expect rate cuts from the Fed to support the economy.